Welcome to this Hantec Markets video on understanding risk and placing stop-loss orders. Contrary to what many would have you believe, risk is not something you should be afraid of. Instead, you should embrace risk. Do your best to understand how it affects your trading and your thought processes, and most of all, learn how to profit from it. On its surface, the definition of risk for most traders is fairly straightforward. Risk is usually seen as the potential that a poor trading outcome could result in the loss of some or all of the money in your trading account. The only way to completely eliminate trading risk is to not trade. Of course, this also means you would forego the opportunity of making any profits. So, assuming that you wish to make profits from your trading, you'll need to take on a certain amount of risk. Without risk, there is no reward. Just like risk, volatility is another facet of trading life that is often maligned and spoken of as something to be avoided. However, when volatility is low and price movements are relatively small and regular, there is a correspondingly low level of risk. Insofar as low volatility leads to low risk, it also leaves traders with low levels of opportunity, at least until such time as there is a breakout or an increase in volatility. Some traders are concerned about risk because they feel they have no control over it. While it's true in most instances that individual traders have absolutely no control over movements in market prices and external influences, risk is actually one of the very few areas over which a trader can exercise some degree of control. After all, it's you, the trader, that decides how large your position will be, along with the price levels at which you will enter and exit the market. We'll discuss position sizing in more detail in another video, but for now, suppose you take a look at this chart and decide that you want to buy dollar yen and get on this big long upward trend that's been in place for several months. If we go from a daily chart to the hourly chart, we can zoom in on the most recent price action. Now, as a trader, it's up to you to decide how large your position should be. If you take a large position, you'll be taking on more risk than you would if you chose to take only a small position. Furthermore, whatever size trade is chosen, a wide stop loss will expose you to more risk than a tighter stop loss. If you think about this a little, it becomes clear that there is a trade-off between the size of your position and the size of your stop loss. By adjusting the balance between these two elements, it's possible to take a larger position without taking on additional risk, provided you use a correspondingly tighter level for your stop loss. Or if the trade calls for a wider stop loss, you can keep the level of risk within acceptable limits by taking a correspondingly smaller position in the market. Again, we'll look at specific examples in another video. While we're talking about stop-loss orders, we should take the opportunity to show you how to enter a stop-loss into your trading platform. Let me quickly add a long position to this dollar-yen chart, and then I'll show you how to place the stop-loss order. So you can see the long position has now appeared in our order window down the bottom. We've bought one lot of dollar-yen. We paid a price of 93.469. Now, if we want to add a stop loss to this order, we right-click on the relevant line down here in the order window, and then we select Modify or Delete Order. Now, if you look at the Modify Order section of the window that is opened up, that's this area. Now, you can see that you have the opportunity to set both the stop loss level and a take profit level for your existing open position. One thing to be aware of here is that the number of points in the level box is not the same as the number of pips. The figure shown here as a number of points ignores the decimal. So where it shows 20 points, this is in fact the equivalent of 2 pips. Once you decide how far away you want your stop loss to be, you can enter the appropriate figure as number of points, which remember is 10 times the desired number of pips. In the next box down, where it says Copy As, this shows the current market price adjusted for your selected stop loss level. If you're happy to use this figure as your stop loss, click on the number like so. This will automatically populate the stop loss box, and you're now ready to hit the Modify button, which has now become active. So let's do that. And you can see we've now placed a stop loss order, which was 2 pips below the market at the moment that we hit the modify button. And here it is showing up in our order window down below. Of course, if you wish, you can simply type your desired stop loss level into this box and bypass those earlier steps. So if you decided specifically you wanted to have your stop at, say, 93.250, you type that into the stop loss box there, hit the modify button, and that will adjust your stop accordingly. And you can now see on the chart the stop has been moved, and you can see down here in the order window the new price for the stop. In our video dealing with capital preservation and reward to risk ratios, we discussed the benefit of employing a strategy where the average win is several times larger than the average loss. If you don't have time to actively monitor your open positions, you can use the stop loss and take profit orders to help you achieve this goal. Once you've determined your desired reward to risk ratio, let's say 3:1, make sure that when you're entering the number of points here in the modify order window, that the number of points you put in for your take profit order is, for example, 3 times larger than the number of points you enter for the stop loss level. Remember, you then have to click on the colored box to copy this figure into the actual take profit and stop loss boxes before you hit the modify order button. And there it is. We now have an order with both a stop loss and a take profit. The take profit 3 times larger than the stop loss. If we zoom into a smaller time frame, we should be able to see that on the chart. Here it is. Please be sure to watch our other videos for more details on position sizing, capital preservation and reward to risk ratios, as well as strategies you can use to boost the number of potentially profitable trading opportunities that you're able to find.